Hi everyone. Welcome to Clone Compounding, where our mission is to learn from others in order to achieve financial independence.
PayPal stock is down again after the latest earning report in August 2023. Once a darling of stock market with a valuation of $350 billion at its peak, the stock price has fallen by more than 75% and currently trades at around $70 billion valuation. In this video, let's look at the competition that PayPal has to deal with, which includes Apple, Google, and Amazon. Also, let's look at whether it is a good investment at current prices. PayPal, the business. PayPal is a payment platform that serves both the merchants and consumers. For merchants, 1. Power all aspects of digital checkout online and in-store. 2. Provide access to seamless credit solutions to enable growth. 3. Protect against fraud and improve risk management. 4. Offer tools and insights to attract new customers and increase sales. For consumers, 1. Help people manage and move money domestically and internationally. 2. Offer credit and installment pay services that are accessible and cost-effective. 3. Facilitate simple, secure payments across devices. 4. Deliver flexibility with payment options globally, across platforms and merchants. Millions of small and large retailers, online and in the real world, accept PayPal payments. Over the years, PayPal has launched several products in fintech space. For checkout, traditional PayPal, Venmo, PayPal Pay Later, etc. For processing, PayPal Braintree. For digital wallets as well as merchant services such as risk management and fraud protection. In 2022, PayPal processed around $1.36 trillion and had 435 million active accounts. PayPal, the competition. First, Apple Pay. Apple continues to move deeper into payments and PayPal is feeling the pain. PayPal Holdings still dominates as a provider of digital payment services, but its lead is narrowing as rivals gain share. Apple Pay, which was launched in 2014, has been making the most strides. Those troubles are apparent in PayPal's stock price, which has gained only 3% this year. Its closest rival, Block, SQ, has advanced 23%, while Affirm Holdings, AFRM, the buy now, pay later lender, which also dabbles in payments, has gained 90%. Apple, meanwhile, has seen its shares climb nearly 50%. The share of online retailers that offer at least one checkout button linked to a payments company has increased to 86% from 83% over the last 4 years. But the number of retailers that have at least two checkout buttons has surged to 65% from 27% since 2018. That means that while the payments pie is getting bigger, competition is getting stiffer. An increasing number of checkout buttons per site is an indicator of checkout button popularity as a payment method. However, it is also a risk factor, for PayPal in particular, as the market leader, since it increases the competitive intensity at checkout. PayPal has a checkout button on about 80% of retail websites, about the same as 5 years ago. But Apple Pay is available on 80% of iOS apps, compared with 44% for PayPal. That could be a problem for PayPal given the ubiquity of Apple devices, especially as more payments move to phones from cash and desktop computers. This rapid competitive encroachment by Apple Pay is likely the single biggest competitive threat PayPal faces, and the most critical issue for PayPal's new CEO to tackle. The current CEO Dan Schulman plans to retire at the end of this year and the company has not declared a successor yet. With increasing competition, PayPal no longer looks like the high-growth darling it was during the pandemic, when a sudden rise in e-commerce boosted shares. When PayPal posted its first quarter earnings earlier this year, it showed that in-branded payment volumes grew 30% year-over-year, while its higher-margin branded business, the PayPal-branded checkout button most familiar to customers, grew only 6.5%. PayPal stock currently trades at 14 times forward earnings, well below its 5-year average of 32 times. Despite the downturn, Many analysts are still bullish on the stock, with 68% of analysts surveyed by FactSet rating shares the equivalent of a buy. The average target for the stock price is $90, implying a gain of 30% from recent levels. If you are enjoying this video, please smash that like button and consider to subscribe for more such videos. PayPal's dominant market share is mostly due to the fact that people have trusted PayPal for more than 20 years and still find it the easiest, fastest and most versatile way to transfer money and make online purchases. While Apple Pay is a direct competitor to PayPal, there are certainly differences between the two. First, Apple Pay operates within the Apple ecosystem and is a great way for Apple to protect its moat and provide more value to users of the Apple ecosystem. However, in the fourth quarter of 2022, Apple's global smartphone market share was 24.1%. Despite Apple Pay being a great service, retailers offering Apple Pay only target the population of people who have Apple products. Unlike PayPal, which works on all devices and operating platforms. Merchants using Apple Pay also still have to pay the overheads they have to pay to card operators such as Amex and Visa. We see Apple Pay as more of a competitor to Venmo, especially replacing cash bank transfers between individuals. Venmo currently accounts for 18% of PayPal's revenue. Unless everyone switches to Apple Pay just isn't a universal payment method like PayPal is. Second, Google Pay. Google Pay is a digital wallet which was formerly known as Google Wallet. Google Pay integrates with other Google services and products, and is Google's mobile payment solution. You can download Google Pay on both Android and iOS devices, and transfer money to friends or businesses, connect your credit, debit and transit cards for mobile use, and manage and review your transactions. You'll also be able to earn reward points on your spending to make the most of your money. The key differentiating feature of Google Pay is that it can be linked with other Google apps to enhance its functionalities. Google Pay's search transaction feature is a case in point. Moreover, if one is using Google Chrome, Google Pay integration comes in nicely. However, this might not be ideal for those who are wary of putting all of their personal data in one place. There are in fact some people who do not use Google Pay because it would mean Google will have all their information, including their financial ones. A look at mobile payments brand perceptions as captured by Nielsen IQ shows that PayPal remains the most trusted, with good ease of use, highly international as well as offering wider money management services than Apple or Google Pay. PayPal, the fundamentals. PayPal's fundamentals remain strong despite competition from Apple Pay, Google Pay, Amazon as well as Strip and Block, as it continues to grow in transaction volume, customer numbers, and profits. The company's dominant market share is due to its long-standing trust, ease of use, and compatibility with all devices and operating platforms. On a trailing 12-month basis, PayPal has bought back the most shares it has ever done since 2018. Right now, they are using most of the available free cash flow and rightfully returning as much as possible to shareholders, now between $4 billion to $5 billion per year in buybacks. We think this trend is likely to continue if PayPal remains as undervalued as we think it is now, boosting earnings per share and pushing shareholder returns upward. On a free cash flow basis, which can be projected to grow from $4.87 this year to $8.55 over the next 10 years. And by applying a very conservative 6% yield on FCF, we arrive at share price of around $140, which is around double the current share price.
For now, that's it from us. Hope you enjoyed and learned from this video. Smash that like button and subscribe to receive more videos on memos and write-ups from top investors. Thanks for watching.